Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about something different than I usually do. I'm going to be talking as the market on whole, including in indexes and how the technical analysis for them is going, as well as discussing some of the latest news that involves around the market. So let's jump right into it. So if we're looking here into the weekly movements, which is what we're more interested in, we get to see that well, we all know that the market has been rallying for quite a bit. And in the last couple of weeks or so, ever since September hit, we've seen kind of a negative trend. Now, on the MACD here, we get to see for the first time in a very long time, the MACD is actually gone negative. And the last time that happened was probably way back in April. So that negative trend towards the MACD is quite alarming towards myself. We get to see as well that the average directional index shows in, well, there is a very strong trend, but that's because of the strong movements it had for weeks. William percent R puts the puts the market right now as incredibly oversold, and that's because the fear index has increased to almost fear. It went from around 74 on greed to 48 or 47 on neutral today. If we were to look into the moving averages of the market itself on the Nasdaq index, we get to see that the 10 SMA is above the 30 SMA, which is bullish. It's above the 200 SMA and the 50 SMA. We all know it's a rally. The really interesting thing is that the market is in the trading action zone, and that's where reversals are likely. And so it exits the trading action zone at around 10,000, 1100. So let's take a quick look into perhaps another one, the Sept. We get to see basically the same thing for the SP 500 in terms of the response of the market. If we were to consider onto the moving averages, we get to see as well that the 10,300 to 10,100 is around the bottom range of the band. And then if we look into the moving average band, around 11,500 seems to be where the middle is setting, and on the top is around 12,600. We get to see in terms of unbalanced volume, it seems to be increasing, decreasing, increasing, decreasing, and it's more of like buying the dip and people feeling a little bit more comfortable with one green day, putting it all in, and then falls down. And so that is where the market is currently at. If we were to look into this beautiful channel that the market has enjoyed for a really good amount of months here, it broke it around the 8th of September and continues to break it. So in terms of the channel and trend line, it has broken down. And so that is quite of a dangerous move. If we were to look, for instance, at something like the Dow, we also seen that it's actually breaking it. But NASDAQ had a really amazing trend line or channel. So let's take a quick look into where probably we're looking at a price line for significant support to resistance. Easily we can get to see that the 10,800, that seems to be a very significant one, and it just kind of is touching it. It closed below it for one day and then bounced back a little. That was the green day we had just recently. We get to see the Fibonacci retracement sits at 11,235 in terms of resistance. If we were to look into support, we're looking at $1,000 less than that. Now, significant support points that I think that would be very much in trouble if we broke, it would probably be around this area here. And that was the area where we had a bunch of red days in July. It wasn't red days, it was more sloppy. So it was a lot less intense than we have today. And so the 10,500 mark is quite of a significant one. And then right below the 10,300, that is where I would worry. Below that, significant support is around 10,000. Now, I think if it does break 10,000, then we might be in very much of a trouble. If we're looking at resistances, it's been trying to hit that 11,200 resistance for quite a bit. It even attempted it today, this morning. So that is quite interesting to see if it does actually manage to break it. Above there, we're looking at the 11,500. It also attempted to break it twice, very similar to what we've seen here. In terms of even higher resistances, we all know the market is an all-time high, so no need to go there. Now, if we were to look into some of the news, so some of the news includes that the Feds are not increasing the rates until, for instance, inflation reaches 2%. So that probably won't be even met until 2023. So that is positive news there. Now, before we go into there, the U.S. oil inventories fall across the board last week. So that is great. It increased the oil prices just a little on the dip back. Another thing where I do check my news, I do check them on Yahoo, Bloomberg, and a bunch of other sites every morning, and that kind of helps you get a little bit of better insight into where the market is heading. One of the ones I've been watching as well as Market Watch, and I read this article here, and it was quite interesting for me. And I hope they're wrong. I really hope they are. And basically, it shows you the Nasdaq from Nasdaq 100 index right now and where it was around 2 decades ago. And they say that they found this to be stunning and shocking. Kramer told investors in a blog post, "I hope this turns out to be wrong, by the way. More than just a chart, the numbers he highlighted this week mirrors the action of 1999, which is the dot-com bubble. From the March 2020 coronavirus-induced low, the Nasdaq 100 jumped 84% over 163 days. Dial it back a couple of decades ago. The index rose around 86% over 151 days. The reason for the explosive rally may be vastly different, but the paths are indeed starkly similar." So basically what we get to see here is in blue, that was the previous path, and that's the delayed lag path. And then the orange one here, or the yellow, depending on what you're seeing on the screen, we get to see that it's actually very much on a striking similar path. And that's what scares me here, is that as you get to see, similar to around this area here, is where we got to see the dot-com bubble crash. Now, are we in a rally? Yes, we are in a rally. Economy and stocks are way ahead. So the stocks are way ahead of economy, and it's a little bit scaring me in general. Now, yes, scared money doesn't make money. But in terms of my strategy, and you can go on with whatever strategy you would like to. I'm just presenting data here. I've gone full cash, very similarly around this area here. Mid to late August, I gone full 100% cash, and all I'm doing right now is basically scalping. Something like SPI today, where it went 3,000%, which is not something we do every day, or 4,000%. I do scalp for around 10-20%, playing around with 5% of my portfolio, rather than trying to put in my entire portfolio into the market and then we see a crash. So make sure you don't risk a lot of money into this unless you're really comfortable that the market will rally. What do you think about the market's next move? Let me know in the comments below. Share, subscribe, and like, and have a wonderful day.